None of VPM Partners, Bob Kendall, or any of its officers, directors, employees, other personnel, representatives, agents, or independent contractors is, in such capacities, a licensed financial advisor, a registered investment advisor, or a registered broker-dealer. None of VPM Partners or its personnel gives investment or financial advice or makes investment recommendations, nor are any of them in the business of effecting trades or directing client equity accounts or giving futures trading advice tailored to any particular client situation. Nothing contained in VPM Partners broadcasts, on its websites, or in its written materials constitutes a solicitation, recommendation, promotion, endorsement, or offer by others described above of any particular security, other investment product, transaction, or investment. Copyright 2014 VPM Partners. All rights reserved. Terms of use apply. Reproduction, adaptation, distribution, public display, exhibition for profit, or storage in any electronic storage media in whole or in part is prohibited under penalty of law.
Good morning, everyone. It is Friday. Yeah, I hate to keep saying the same thing, but it just seems like these weeks take 3 minutes to go by. I guess we're all busy. That's a good thing, right? Anyway, as usual, we'll keep our schedule that we have on the screen here, and we'll continue to move forward with this market that's getting more and more like watching paint dry, I guess. I'll go ahead and bring my partner in here, Mitchell, and we're on our new set. It's a little distracting, but it'll be fun anyway. Something for you to look at if you don't want to look at us. Anyway, I think news-wise, I had great hopes for GDP being a positive surprise. I guess in a way it was, even though it was minus 2.9. Somehow that ended up to be a good thing. The bottom line is this market will not go down. That's what the market's telling you. It doesn't care about anything other than going up. And when you get negative type news like that, I guess theoretically negative, I guess everybody's blowing it off because now it's snow. It's just that the drifts got bigger, I guess, since the last time that we evaluated it. So anyway, I just don't really see anything exciting. I was hoping for more, even though when I wrote commentary on Monday, I was really talking about that we were going to be driven by market sentiment. Evidently, everybody's on the beach somewhere because there's not a lot of volume. There's not a lot of stuff going on. Volatility is still remaining pretty low. I think we got up to about 12 handles and a little bit on the 3-day indicator. It was all the way down to 580, so I guess that's a good thing. It's increased a little bit. We saw some volatility yesterday to really get things going as far as market printed down all the way down to 1944 and change, and then rebounded from there to close down just a couple after being down pretty decent numbers. We're able to take out the previous day's lows. So anyway, we'll go ahead. I'm going to go over and we'll go ahead and start getting into some analysis. Unless Mitch, you have anything that you saw overnight or anything, No,
I mean you said it. You said it perfectly. It's paint drying or grass growing, whatever you want to call it. It's just unbelievable that the market's not really doing much of anything right now.
Yeah. Maybe it's just summertime blues, but the
summer doldrums.
Yeah, But the bottom line is, overall, it is doing something. It's continuing to trend. So let's go ahead and start looking at some of the charts here and take a look at what's going on here. Not a lot's changed. We've been in this very narrow range, and one of the things I've been developing in commentary that I've been talking about is that we really have entered into another sideways range. So we went sideways, we dipped down a little bit, we went up, made a slightly newer high up to 1968 this week. Last week's high was 1964. So we're seeing a little up, but now I believe the close last week, I had it somewhere here, was like 1962.89 or something like that. So we're slightly negative as we stand here at the moment. There continues to be some positive rotation out there, though, as some of these sectors and things seem to do pretty good. I guess the world doesn't evolve around GoPro, because that offering came out, did well, but no one really cared, except for the guy that started as a surfer turned billionaire yesterday. So that was all good. But the bottom line is the market is continuing to consolidate here. It appears to me that there's at least the next leg up will push us up to the 2018 level, and I'll just kind of summarize really what happened this week. And going into Monday's commentary, it was a big commentary, and you look at it, we had a lot of orders come out. There's a lot of possibilities that I discussed in the commentary on Monday that are very real, and it's this market continues to move higher just because of the general view, I believe, that the Federal Reserve is going to perpetuate this thing. I think they will until it breaks, and I'm going to continue to read the markets as I do, and they're positive. That my job is to understand the trends, understanding what the patterns are going on, and stuff like that. So, I know a lot of folks do Elliott wave analysis. Some people think it's hocus pocus. I started in 1980, 81 when I started doing it, and it's led my entire career, and it's driven a lot of thought process over the years. And right now, that's what some of the basic theories. I don't live and die by the wave count, but what I do understand is the patterns and the events that are likely to occur as they unfold. And I think that's important to have a context. If nothing else, I always said that the wave principle gives you an idea of where you are. And for instance, if you're in a wave 3, it's like being on a street. It's like a map with no street signs, but there's markers on the street. Maybe a gas station on the left-hand side when you get 3 blocks up, and that's what Elliott wave is. It doesn't tell you you're at a wave 3, but it tells you that you're going down, I guess, a wave 3 lane. And that's where we are right now on a big scheme of things. So let's take a look at, PPM's really, really quiet on the daily here, plus 11.09 and 0.09. So slightly positive, not in a trend mode, but we've been going sideways. So even the underlying trend is still slightly positive there on that level. And as we've talked about, as I go over and look at the weekly graph here, we continue to see very robust levels on the intermediate level, which is 0.48, 0.44, and 0.34. Hate to be redundant, but anything over 0.25 is a positive trend. So we're pretty positive on a general sense, and some of the objectives here, just bringing up, I'm going to move this over, but bringing up what the objectives are here. 1973, we're awful close to that minimum objective. It appears, based on some other patterns that I've talked about in commentary as well, is there's at least an initial range. 1973 to 89 is going to be a target range for this next little move up as we walk this thing forward slowly. On the bigger scheme of things, it looks like the upper end of the target right now for this particular sequence is 2034 to 2072, and I've been talking about that for, I don't know, 7 or 8 weeks. And then you can see on the screen here, in fact, let me just make this a little bigger so it'll be easier for you to see. You can see the dots that are up over. Matter of fact, I am going to do something live on screen here just to change this a little bit here. I didn't get the page I was supposed to get here. 1 second. There we go. I just want to make these just a touch bigger so it's going to be easier for you to see them rather than always have to put arrows up there. But these dots that are up at the top here are the Fibonacci objectives that we have. The VPM indicator has told us is going to be the targets for this, and they have been. I'm just going to count here. 9 weeks ago is when the first time I would have mentioned this target of 1973 to 2034. The market at the time was closing at 1878. So we've risen up almost 100 points from that point as we go toward that objective. So the objective was valid, the market's valid. There are some interesting things happening here. If you look at, well, the PPMs are positive. You see that we had a little spike over here. Let me bring up the whiteboard here just to bring that into focus here. But you'll see a little spike here, a flattening of this, and actually the PPM 3 is actually down back into its first and second and derivatives here. And what that tells me is that the markets, the trend is starting to get into one of these where it's going to flatten but maintain a certain level. As long as it maintains 0.25 or better, this is going to be a positive trend. And we're still, the PPM1 is slightly outpacing the PPM2, which tells me that the trend's still expanding on an intermediate basis. So we are going to need to see this market move out next week, or this momentum will continue to fall a bit, just because we've been, even though we're higher, the last 4 weeks have been pretty much in the same range. You can see here as far as that goes, we've been around the low mid 1900s as highs, but we keep edging up. Like I said, 64 was last week's high, this week 68. I suspect we'll see 73 plus next week. The trends are just too positive here for that not to happen. The other thing is, let's go on over to the super slow-mo chart, looking at the monthly. You're continuing to see this in a very robust mode. We got 179, 148, 105 on PPM 1, 2, and 3, which is very strong, robust environment. If you go all the way back and we revert back to 2007 and 8, where the last high was, you can see those values. If I can get down here, they were still, as we came right into the highs here, we were 0.41, and then finally when it broke down, we went down below the 0.25s, and we saw the momentum just fall apart. We went sideways for 3 or 4 months as we went through the summer of 08, right before of course the great debacle of Lehman failure, and on the verge of losing AIG and other things that would have been much more devastating than Lehman. I guess they had to make a decision on who's going to stay and who not. But anyway, these momentum numbers will remain fairly high even as we come up there. But right now at 179, we've got a lot of upward momentum to bleed off before, on a monthly basis, that there's a major turn about to happen. So as I mentioned on looking at the orders and things that came out on the weekend, there's a serious rotation. We pushed the bullish percentage up to 69%, which is that's trend mode on the database. The death pattern I talked about has been negated. Never happened, even though we've seen literally, I think the last 5 or 6 weeks, Mitch, you can chime in the background if you want, but I believe the last 5 or 6 weeks we've seen a positive rotation in database where we've seen more buys than sell, and the big surge last weekend.
Oh, absolutely. I'm just pulling up the stats right now on that, but undoubtedly we've had a massive amount of buying over the last couple of weeks.
Yeah, so what does that tell us? And I think that also is a good conversation here as we're talking about the indices, is that there's a rotation. And if I remember right, I'm going to bring you back here on on screen, Mitch, so we can discuss this just a little bit. Is the bottom line is, if I recall, we had a lot of rotation in the small cap sector primarily and the mid cap, right?
Right.
Yeah.
Yeah. This last week, we had those over 3,000 orders. The week prior to that, it was pretty much even when it comes to net the buys and the sells. Week prior to that, we had another 2,000 buys. And if you keep going further and further back, you'll see that we've just been adding on more and more positions across the database pretty steadily for the last two even 3 months.
We don't have that view on the
not yet. It's one of the things that
I think 2 weeks ago, folks, I asked him about that, and he's about to give me the same answer anyway. But yeah, we've got a bunch of projects going, and we've got some exciting things that we're working on in the background that we're getting anxious to tell you about. And life here at VPM Partners is continuing to move forward, and there's a lot of exciting things that we're working on. And so anyway, it's like pushing on a rope. I'm almost got the TradeStation versions done for release. We're close. We're putting the final install stuff together right now. So I've just got a couple of things to verify, and then we're going to start talking about you having the ability which to do any time increment, anything. You're going to have to get a TradeStation account to do this, but it's pretty valuable, and we're going to be talking about what the access levels are and how you get that and all that, all the details once we get that fully released. But back to the markets, there's just the rotation has actually been interesting. Large caps are continuing to be the leaders on the upside, and we talked about this I think on Monday, where we saw we're seeing this I guess the outliers of the back end of the capitalization, this mid and small cap. We saw a rotation there where we actually saw a 10% decline in the small caps. So you got your correction, you just didn't get it in the S&P, you didn't get it in the visible, I guess, what everybody is watching, the front of the curtain, and behind the curtain there was a rotation going on. And that is really, how this market got to rotate, and looking at, like I said, the database and what's come back in. A lot of these stocks have come back in. I believe IJR now has made a new high. Let me just put that. Let me get over another screen here and let's take a look at that while we're talking about it, because I believe it has made a new high. No, it has not. I thought it had, but let me bring up. So this is interesting, though. I think this is a daily graph. Let me bring this full screen for you, and interesting. Here's the weekly buy that we just got up there above Mitch's head. We got this new purchase here, and I believe this is on 1-2, if I'm correct. Let me just look here. Yeah, this is on 1-2, and I believe that's the right model. But so this pattern, though, is quite bullish. This is a classic ABC pattern, and then markets should go up to the next level. 0.32, 0.228, and 0.28. So you got trend levels on all three PPMs that we're looking at here, and had a nice trade from beginning of 2013 to this last exit here. When was that? That was on February 14th, actually. So you've got had this nice little run here. We went sideways. It's resuming to the upside, and we paid up just a little bit for this thing, not a lot, but it's this flat pattern and then a resumption of the trend. So it paused, it rotated around, and then we saw the market go back in and go into this mode. So let's look at MDY while we're on this little track here. And then one of the things I did not do the other day is we didn't get through treasuries, which, interesting enough, are dropping again. So they got right up to that 265, 268 number. So we'll go through that in a minute. But here's MDY, which also has a purchase recent purchase, and we're looking at, I'm not sure, we're 3.2 on that one, I believe, though. I think we already had that. Yeah. So this is this model's mismatched to the optimized on VPM right now, but for practical purposes here, this thing is seeing 0.54, 0.39, and 0.34 all trend mode again. So I mean, I'd like to find a place. My biggest hope has been is we get finally get a high here, and then we reset all of these values, so there's an opportunity to make some money. But the opportunity is continuing with this trend right now, and that's what VPM's seeing from the database standpoint. Certainly, we've been long this thing pretty solid since 2013, and the little bumpy first quarter with all the, I guess this, we'll call it the snow syndrome, and the snow watered down the markets, and we just kind of went sideways there. So let's go ahead and I'll go back to analysis here. Looking at let's take a look at the Treasury, since I mentioned those. Here we go, and I am going to take the models off just for a second here, just so those things are not in the way. All the buys and sells are in the way. Here we are at 252, call it 253, 252.9, and we got right up to, the other day, as we look here, we got up to, I believe it was 265.5, and right back down again. And so it appears that the bond guys, whether they've got it right, this has been, we had this conversation, I remember, weeks ago, haven't talked about it for a little bit, but the bond guys seem to be buying into the weakness of the economy, where the stock people are going, well, it's okay because Janet's going to keep giving us money. And so somebody's got it right, somebody's got it wrong, or maybe it's both right, that there is a weakening economy, and that means lesser demand on money, even though asset prices are being supported by the Federal Reserve. And that's at least the sentiment. That's the only thing you can draw from what's going on here. These yields continue to stay down. I think we got down to 240 or so here. I'm looking at this little spike here. Let me bring up screen so everybody can see that. Yeah, we got down to 240, exactly 240.02, and then the market reversed, went all the way to 265. There were signals and things coming out. Let's take a look at, I remember showing the daily signal here that came up. Let's go to the daily chart real quick. And oh, I turned them off. So, well, let me turn that back on. Sorry about that. I didn't think I was going to need it. It's still long, suggesting this is long the interest rates, which means rates to go up, even though this pattern has formed here. So what may be happening, and this will be interesting, because it appears the market's doing better when interest rates are inching up right now. So we'll see if that pattern continues. But let me bring the whiteboard in, and I'm going to draw the pattern that is most likely. Any of you that have done any technical stuff, this is called, right here where I'm drawing the arrow up, that's the right shoulder. So you're getting a retracement value. We'll look at the actual retracement values here in a second. But typically what you get, this is what some folks call cup and handle, or whatever you want to call it. But the next move up would be where I just put the arrow pushing up, would be to move above these moving averages and start to move up. However, having said that, let's look at the PPMs from VPM viewpoint. And I just drew arrows over here, and I'm in the way, so let me get out of the way. The three arrows that I just put off on the left here, those are PPM minus 30, a plus 15, and a minus 8. So the 21 and 40 moving averages, and a 40 moving average is very similar to what the 200-day would be. This is a 40-week moving average. They have very similar values. And then we've got a negative short term on this. this is the daily. So once again, I forgot I switched to daily. So this is a 40 week moving average, which would be more similar to the 10 week moving average. And matter of fact, I always said we're going to do this little tech corner talking about the interesting thing about the patterns that I'm working on here. Hang on, I know why it wouldn't work. The thing that happens is on doing this top-down analysis that I've talked about over since we started the show, and educating at least on my view of the world from a technical viewpoint, looking at monthly, weekly, and daily, and trying to look at these things. It's interesting that the bottom average, or the longest average on the daily chart, is very similar to the value of the shortest average on the next level up. So if you go daily 40, weekly 10, and then the 40 week moving average will be similar to the 10. And let's see if what I told you is true here. Let's take a look at that. So so right now the 10 moving average is 2573. This is the 40 week moving average. If we go over to the weekly, we're going to look at the 10 here. It's 2575, pretty close. And so the 40 on this is 2697. So if we go over to weekly, it should be the monthly 10 will be a very similar number. It's 2661. So they're all in that same range, and this is why I talked about the pivot area, that 265, 268. That's going to be the breakout point for these averages to actually kick in and to show what's going on. And actually, I'm glad I brought this chart up, because this chart probably illustrates the pattern the best. It's also one of these right shoulder formations. You see on a monthly basis, a monthly graph here, right on this bar here, where I'm putting an arrow up, we got a buy signal on a monthly basis on BPM. And that's the one thing that you can do if you decide to utilize the logic on TradeStation, is you can actually see monthly, really long-term signals as well. TradeStation has some limitations on some of this stuff, but we'll talk about that when we start to introduce that. But this is the same pattern here. We got the move up, and then we get the right shoulder. I'm going to get rid of these arrows, and then theoretically you're going to go up. And as I talked about before, there's some new lower objectives. Originally it was pushing the 4 to 5% range on the 10-year. That is off the books right now, at least from a pattern standpoint. It could end up re-emerging, but for the moment, that there's a shorter term target that's still valid. And I'm going to pull this stuff off here real quick just so you can see it. Is this pattern here? You notice that we're declining into the moving averages, and the moving average is it's interesting, a very mixed picture here. You got minus 0.82, plus 1.85, and a minus 0.96. So what you've got here is two of the averages are still declining through the pattern, and we have the typically what will happen is when the 10 crosses through the 21 here, that will be a top, and that would have happened about here, which is pretty close to the top of that. These averages then will, let me get my pen out here, in this area here, these averages will then all converge like they have. The market will do a retracement, and we'll figure out what that is here in a second, and then you get a resumption of the uptrend. So these old numbers, this 4 to 5% numbers, could come back into play from the standpoint of what's going to go on with the interest rates. And it appears to me, the best I can see right now, that the higher interest rates are not damaging. I've had this conversation with you several times in the past, and they do not appear to be damaging from the standpoint of what's I guess what we're seeing in the configuration. So as yields move higher, it tends to be that there's maybe a cash flow issue where money's coming out of bonds flowing into stocks, so that's a positive, and that's typically how it's worked over the years, and that looks like that's how it's set to do this time. So, and I think that scenario plays out to a point where maybe at some stage, as you may recall, the magic number that everybody on the street you can make 100 phone calls to people watching treasuries, and they'll all have the same number. Well, we're not concerned about the market until it goes over 303, and 303 was the highs there, approximately where I have the down arrow that I was just putting there. Just put another arrow here to show you. But this area right here, no one's going to be worried about this market until it gets above there. And if we go from the 250, 252 level back to 275, 285, that's going to push a lot of cash. This is a huge market. This thing is probably 10 times now bigger than maybe. I'm going to have to research that, Mitch. We're going to have to make a note of researching how big the bond market relative to the stock market is. It's always been 7 or 8 times. The daily volume on the bond market is usually greater than the entire value on a daily basis, greater than the entire value of the stock market if you added up all the stocks. It's a giant market, and with all the sovereign debt we've seen built up and $17 trillion deficits and everything that we're funding right now, this is a huge, huge market. So a little bit of money out, and if that flow goes somewhere else, it's going to move. And that was sort of the hypothesis of the annual report we did back in February, was this normalization of the market. And so far the Fed is talking normalization, but we're not seeing normalization, although they continue the they continue the taper as the markets are continuing to unfold here. So anyway, but this pattern is overall bullish, which means higher yields ultimately. It's just a matter of time before that gets done. And I'm kind of on a roll here, so I'm going to look at our friends over in gold real quick, and then this is an interesting pattern because I've been talking about this is the long-term monthly. I'm going to spread this out so you can see it just a little bit, so you can get a little better perspective here. But we're coming into a consolidation point in gold, and I'm not a big gold bug, but I do believe that these patterns that are setting up are starting to show signs of a pretty major bottom. And if you think about it, we've retraced about 50% of this rally, and so it's not quite that number, but it's a big number. It's been a huge retracement. Gold's been out of favor for a couple, 2.5, 3 years, so this cycle is going to come back into play. Let's go to the intermediates real quick here, just to take a look at the weekly gold. We're so long this thing forever, just kind of creepy crawling around. We are seeing it starting to move out of these patterns. So, and let me put up, yeah, that's fine. And then going to the really short term and going to the daily, you can see that we did see a boost up here, and then a sideways pattern, 0.32, 0.23, and 0.6 on the ppms on a daily. And I didn't look at the weekly, but I believe we're trying to get into a trend mode there. 0.18, 0.26, so the middle average is up 0.25%, and we're flat on the 40, and this is pretty typical of what this thing's going to look like. I wonder, this is GLD, so I wonder if we switch. I'm going to put yeah, that's interesting because I just put 3.2 on, and we've got both models. That's one thing you can do on TradeStation. You can put both models on at the same time. Let me just take off 1.2 so we don't get distracted by that. So we had a different configuration here on 3.2 where it got out, but it just recently got back in. So to me, that just looking at 3.2 has a longer ppm. There's a ppm 4 in there, which is tied to an 89 period moving average, and on a weekly basis, that's a lot of weeks. that's like a 2-year moving average almost. It's quite a bit. It's just short of like a year and 3/4 of data just to generate this 89 period moving average and to look at the longer term trends. So that's why 3.2 has a different characteristic, because it's looking at a longer term element and looking at the, if you remember, PPM stand for price pressure momentum. So looking for that upward momentum from the standpoint of what's going on. That's really the pattern that's there. So been talking about gold a little bit. I haven't talked about my favorite currency for a while, and I'm not going to today because it's as flat as a pancake, which is Japanese yen. It continues just to consolidate, very similar to gold here. But this is, to me, looking at this, is this market is still in a very bullish mode. It's encouraging. Actually, I'm impressed that 3.2 came back in, because I had it on 1.2, and 1.2 just stayed long throughout the whole thing. That the typical pattern is that 1.2 will get in and out, and 3.2 will stay long, because of the configuration here, and that's why I talk a lot about and process warriors and everything that we're doing here on this show. It has everything to do, not a lot, everything to do with the configuration that VPM's looking at and the patterns that it's looking at that determines how it's going to hold these particular stocks or any of the stuff that we're looking at here. So in this particular case, 3.2 came in later in the pattern. As we came to this consolidation, there was a little rally up. It failed and went back under moving averages. Momentum failed. It just said, I'll get out, and then got back in again. So it looks like a slight loss on the 3.2 trade, and then back in where I believe last Mitch was looking the other day, we're down 6 yet on the on 1.2.
Yep. Yeah, 6%, and I just double checked on that. So yeah, the last trade on 3.2 was a loss of about 1%. So it was pretty much flat, and we're still long, or we're long both of them, but we're still long from the original trade on 1.2, and probably at today's close it'll be closer to 6% than 6.5%. So.
Right. Yeah. So anyway, as we close out this week, just kind of summarizing this first section here and looking at the markets and some of the different elements that people are looking at, we actually, you know what, I'm going to digress before I move on. I got you back on screen here, Mitch. I want to look at our friends in crude oil real quick here.
Okay.
Just because of the, you know, it's funny. I think funny. I don't know. It's really funny. What's the ETF for? Is it oil? Is that it, or is that a stock? Is there an ETF just for crude?
Yeah, there is. So the ETF for oil, you could use USO. That's a pretty good one. Otherwise, the typical ETN that most advisors use is the ticker oil, but they are different. They're constructed differently, but they trade pretty similarly. So USO.
Yeah, I'm trying to get this.
I'm just pulling up the optimized trade system on this as well.
Yeah, so
1.2.
1.2. I think I just switched to 3.2, didn't I? But yeah, so I just really wanted to look at not so much the model, but look at the pattern that's unfolding here, and we're seeing a positive trend mode on crude. So, but nothing. I guess nothing that looks like it's ready to explode or anything here. Let me see if I can make this full screen. Yeah, that makes it worse. We'll just stay as long as Mitch and I are both on the screen at the moment. But the bottom line is momentum is starting to move back in. This does not look like the pattern where the crude oil is going to just go vertical or anything like that. It looks like we're pretty much into that mode. One of the things I'll do here real quick is I will let's just bring up the futures real quick so you can get a little better view. Makes a little more sense. It's $105. So you can just see it's really starting to see a minor failure. This is a weekly. I don't think that the daily trade's really active. Let's take a look at this chart. No, it doesn't. There's really more daily closing prices, so the weekly is going to be your best graph here. But the bottom line is you've got trend levels on two of the levels. So you've got support coming in on this thing at 102.60 or so, but not. This is not an explosive chart. So I guess if you wanted to extrapolate out what that means, then I guess a rock is a story that's already moved to page 4. By the way, you know, it was front and center, and now it's page 4 and about to go to page 22, I think, this weekend. It's a non-event. It appears another scare geopolitical risk, as I put on commentary the other day. Geopolitical risk equals opportunity at the moment, because no one really cares, and there's nothing out there material. You know, I made this comment even on Monday or Wednesday's show that, you know, the actions and things that are going on with all these guys running around shooting each other in Iraq have nothing to do with corporate profits on the rest of the planet. I mean, they're an isolated little pond, and you know, and that's just not going to affect anything. So I guess it's time to go to stock of the day mode here.
Okay.
And I ran over talking about this stuff a lot, but it's a summary. This show is really a summary. I mean, I stuck to the schedule for the most part. So.
So as you mentioned earlier, GoPro went public yesterday. I guess it's fitting since National Camera Day is on Monday.
Oh, how fun!
So that
what's the symbol on that thing?
G-Pro.
You got one weekly bar. That was this week. Obviously, there's just 2
we'll
bars.
We'll have to look at it on a very short-term basis on it. But
did that get loaded into VPM? Do you know?
I'm looking at it. Let me double check that.
I'm going over there right now. So
I know it's been in the past. It's been traded in the past. We'll have to see if it's got the latest data on it. That ticker has, I should say. It certainly will be queued up for this weekend if by the end of today's broadcast.
Right. Yeah, I just want to. Well, here. This is easy. Matter of fact, we can show you how to do this. I'm going to get Mitch and I out of the way on this screen so you can see what I'm doing. So I'm going in and I'm going to put in G-Pro. We'll see if it's in there or not. G-Pro.
It doesn't look like it's in the system.
Yeah, but it should show that it's not in the system, and I should be able to request it. I'm not sure why. Okay, it's not. For some reason, I should get a red link here, and I'm not. Let me do.
I'll do an admin request.
Yeah, would you do
get
that?
loaded.
Okay, great, thanks. But yeah, so typically what happens, I guess it just came out yesterday, right?
Yeah, and I think this happens in some cases when it's a ticker that's stopped trading for some time. You won't see it within the system. I've only seen this once before, but yeah, it's getting loaded up right now. So we'll give it another second. We'll be able to take a look at this within 2:0.
Okay. Yeah, it's interesting because yeah, it's not going to come up, is it? Okay, awkward moment, awkward silence moment in here. But typically, we might need one more day of data here, but about 2 days of data, you should be able to see this thing, and actually VPM will generate, is capable of trading a symbol like this. And yeah, I wonder if we're going to have to remove. There was another company had that symbol before?
There was. I think it was a biotech or something like that in the past.
Okay. So anyway, so much for that. But one of the things, the reason why I brought it up, you can see here, going back to TradeStation, it came out yesterday, and here it is up yet another 20% today. They're just having a lot of fun. So maybe GoPro is what's keeping the market solid, stable right now. But we really don't have much going out there. So let's go ahead to a stock that has some data.
All right. Let's take a look. I read some commentary last night, just wondering if some of these stocks were overbought. So I thought it'd be good to just bring that over to the context of VPM, as far as what VPM thinks about some of these stocks. Speaking of oil, let's start with ConocoPhillips, COP. And
see, I never understood that term, overbought. I don't know what that means.
Well, that's why I thought it'd be good to discuss it, because it is something that gets talked about in the industry quite a bit, even though it doesn't necessarily have any real meaning within BPO.
The overbought syndrome is I missed the trade, so I'm going to say it's too high. That's the way I've looked at it all the time. Overbought is an excuse. It's going up, but it's overbought, whatever that means, or it's going down and it's oversold. Things do get oversold to a point, but it's impossible. It's just a comment. That's for somebody. I always say that's the guy that makes those comments don't have a position, and or they have a position and their position's talking, so they're short the stock and it's overbought and it should be going down. It shouldn't be going up anymore. So the bottom line is, when you're this is something I learned a long time ago, is you don't try to pick the tops and the bottoms, because there's what's every industry has this. There's old traders and bull traders, but no old bull traders. So the guys that do that stuff end up getting wiped out. That's just the way it works. And but that's one of those things there. So COP here, you have some reasonable. Let me bring this up and see if I can get me out of the way here. I guess I'm going to need to do that to look at some of these PPMs. But you get positive PPMs, 0.32, 0.36, what's the model on this one?
1-2.
Okay. You're going to stick with 1-2s on me?
I am. I've learned over the course of the broadcast, make it a little bit easier. So.
Okay. Where is it?
So we're currently long this position.
Forever. Oh, wait. This is daily. That's why it's not coming up. But let me
April of this year, April 21st is when we went long the position.
Yeah, unfortunately, there's not enough data in this to look at it. But this is at least a weekly, and I was looking at the daily numbers here. So what's the price we bought it at?
We bought it at $74.73.
$74.73. And the current profit is?
Current profit's around 15%.
Around?
Around. Let me pull it back up.
See, I have this thing about
15.027 as of yesterday's close.
Okay, there you go. Got to be exact here. Anyway, but this pattern here, this is the weekly, so 140, 136, and 0.51. Huge pattern here from the standpoint. But you're seeing that the 21 is starting to gain. So what will probably happen here is you'll see momentum get lost on from the standpoint of what's going on the what's going on with the PPMs. The short term, or the shortest PPM one will start to lose some momentum, stay in a robust mode, suggesting the market won't decline below it, which is a way big above it right now. We're looking at 80 versus 85, so you're about 5-7% above the moving average right now. So what may happen is this stock may start to consolidate, but it's not gonna sell out here. And it's interesting because a lot of these oil companies have been leaders in spite of I guess they didn't need crude oil to do a lot. There was all of a sudden a big surge in these prices. I noticed that when we went over the oils the other day. So let's go to next.
Next up on the list is Newfield Exploration Company. Ticker is NFX.
Another one. Here's a purchase here. Is that 1-2 as well, right?
Yeah, 1-2 as well. Got in at the end of March 31st at 31.74. We're currently up 37.56%.
Yep.
As of yesterday's close.
Yeah, and TradeStation shows 404 in. Is that the right date? Yeah, 404, which they pick up the end of the week instead of the beginning of the week. That's how they do their dates. They use Friday's date for the bar value rather than the Monday's date. So Monday was the beginning of that week. But anyway, so yeah, we're seeing the same thing here. Look at this. 2.84, 280, and 140. This thing is screaming with no sight, no end in sight here. Another new high this week. Looks like it's going to close at or better than where it was. So this is a screaming trend. And what typically will happen is this will hit a price level where there's resistance from the standpoint of they can't find another bagman, someone else to buy this thing, and it will start to consolidate and then possibly one more high. This is also a classic from the standpoint of just looking at what's going on here. This is a classic, like 1, 2, wave 3, so you should get some kind of wave 4 and then another move up as I scribble on the page here. But that's pretty much what you should see going forward on these on this market here. So yeah, let's do one more, and then I want to go back and
the last one on my list that we'll cover for today is Marriott International, ticker is MAR. Stayed at many Marriott hotels over the years. My wife used to work there, so.
Yeah. You used to call it Marriott.
Marriott.
So, Jay used to work there too. So.
That's on the 3.2 system.
Okay.
And we're currently long as of July of last year, July 22nd, 2013. Got in at 41.53, and we're currently up 54% on it.
Yeah, that's been long for a while. Let me crunch this down a little bit to get a little better perspective here. Another one of those patterns that we've talked about, just in summary here, is these elongated up a little bit. That doesn't make it do it. It's the third trade was the winner on this one. So if you'd had this in your portfolio, you'd have had a small loser, small winner, big winner. And you know, it's not the fact that we got in and got back in just has nothing to do with anything. It's just that it made decisions that in hindsight it didn't go down. If it would have went down and you didn't get out, then I guess we would hear, maybe theoretically we would hear a louder voice than we would the fact that we bought and sold and bought and sold. And if you combined all three of these trades, how much are we up on this last trade?
54.081%.
Yeah,
as of yesterday's close. And yeah, I mean, it's hard to see right now because you see where we sold out of it, the left of your screen, right above your head. That gain right there when we sold out in 2011, that's 107%, almost 108% profit we took on it. And
what were these other two trades?
Well, it was loss of 6% in 2012, 2013, a slight gain of 5%.
Yeah. And
now we're long at to the tune of 54% profit.
And remember, we've talked about this plenty of times here before, is that, you know, the impact to the portfolio to lose 6% of 4% is an immaterial amount. And you know, and if you added up those last four trades, you got 107. Actually, you pretty much washed out the two trades. Almost washed. One lost 6, one made 5. So it's pretty much a wash on those two trades. And then you got another big trade here. So just of the last four in this particular symbol, has been that's been pretty good. Matter of fact, you should have put every dime of every account in this stock, and you'd be up hundreds of percent. But it doesn't work that way. The compliance officers would be disturbed by that, that type of trade. But the bottom line is, it's just like with the Netflix. You know, if you put all your money in Netflix and did the last 4 trades in VPM, you would have made, you know, 700% or something ridiculous. Yeah. So you got anyway. So bottom line is here, these are good trades. These are the way trends develop, and then ultimately you get to this pattern that starts to see a move higher out of here, and that's exactly what you want to see. And it goes back to the stage. Got to do two trades. The third trade is the best trade. Sometimes it's 4, but they do happen. And if you're screening this, it'd be interesting to see what kind of screens this stock came in at. And someday I will have my dream of having the ability to look at fundamentals and be able to look at what's going on as far as some of these, you know, screens. Like, it'd be nice to know if this was on a screen of any sort at some point in time. I always give Mitch things to think about.
The wish list, yeah.
Yeah, he's my data miner.
Yeah. It's just too bad with this stock that we sold out of it in June of 2013 at $41.02, and then had to buy back it a month later for 51 cents higher. I mean, clearly that's a bad trade, right, Bob?
I know. We kind of really. That's an inside joke.
Last week I was at an advisor's office in person, got to sit down, and that was a comment that was brought up. And of course, he's looking at the last one trade, not particularly on this stock, but you look backwards in time and
$7.95 that makes a difference. I realize that's time hundreds of accounts, but the bottom line is, yeah.
Of course, they weren't complaining about the trade in 2011 that was selling out at a good time and then repurchasing thereafter. So
right, and that's the point of these trade impact charts, and there's just not enough of those being watched and or looked at. There's some real stories to be there. Maybe next Process Warriors, maybe we just start honing in. I was thinking about we did basically a show and a half, the better part of 2 shows on Portfolio Expert. I think next week we don't want to alienate those that aren't using that but the trade impact charts, it's just I mean, it's such an incredible way to view what you're actually doing for your customers. It's pretty amazing as far as that goes. So go back off screen here for a second, and what I want to do is just real quick. There's a couple of charts I didn't discuss earlier, and I want to do this. I have talked about these 2 charts are the spread differential between EFA and EEM. And I said, when these things turn up, this will be the sign that the U.S. stock market is probably going to put in a pretty significant high. We've had those on screen here for, I don't know, 3 weeks now, and you can see. I'll bring up just this one so we can focus on this one here. You see it's just new lows over here. This has been a great trade if you're long U.S. short the this is, I believe, the EFA here. Yeah, this is EFA. Basically short Europe. This worked really, really well. And then this one here is the emerging. It's went to new lows. It's just kind of wiggling around, but you can see the same basic pattern here. The U.S. has been the leader in the recovery of the markets, and that's certainly just how it's gone all along. So I guess in closing here today, and summarizing what's going on with these markets here, one of the things I haven't looked at my favorite futures 24-hour charts, but the cycles have come back into alignment again, where we saw a reasonable low cycle come in today on the hourly graph, and then we also saw spot on the 5-minute chart here, the low that came in this morning. You see a couple things going on here. Let me blow this chart up all the way. They were kind of off cycle over here, although here it was pretty good. We had a high, somewhat of a high or beginning of a decline, and then this cycle here was just spot on. And 2 days ago these things were all out of whack, and they've kind of come back into the original cycle that we've seen unfolding here. And it's interesting because it looks like we're going to come into a low cycle in the next hour or two, which suggests to me that we're likely to see, this is something I like to do at the end of the show every time, is to talk about expectations for the balance of the day. It looks like we want to surge back up again. Whether they can get through these highs or not, that'll be the case. That'll be it. There's not, like I said, the Iraqi situation isn't big enough or seems to be in focus anymore that there's going to be any short covering or selling off ahead of the weekend. It looks like it's going to be pretty stable. We could see some upside. The number that I had on commentary last night was the 1962.90. It's going to need to be above that level to really be a bullish signal, but anything above 40 is just neutral and just will continue this pattern 42.68 until it looks like until we break out of the next level. It does not look like there's any downside at all in this market. So Mitch, I guess we got about a minute to go. You got anything
No,
that's
I'm
come
looking
up while I
forward to
was talking today?
I'm looking forward to seeing how the orders go this week. See if there's any more traction within the database. Obviously, we've put on quite a few symbols. Most of the portfolios are 3/4 to 100% invested on the stock side. So, I mean, we're well postured for that.
Yeah, wasn't it the average was 84 or something?
Yeah, the average is 84, but if you had like a stock portfolio, chances are you're somewhere around 90% invested, if not higher.
Okay.
So
yeah. So anyway, folks, listen. Have a great weekend. We will see you on Monday morning. Market Thunder will be back, and we're looking forward, like I said, to see what the runs are. I don't have a great expectation for a lot of rotation, but that doesn't mean that this is one of the things that happens when you have a database of 18,300 symbols. A lot can happen in the background, and maybe you don't see it through the indices, but there's a lot of rotation. People will start, when you're in a market and you're trading historical highs, people will start looking for what's cheap to buy, and then you get the rotation to what's cheap from there. So anyway, we're over time, and we had fun today. I hope you did. Anyway, all right, folks, have a great weekend, and we will talk to you on Monday.